So let's talk about trend. Most traders, they get it wrong. And it's not because the market is out to get them, it's because they're confusing the real moves, the structure, with all the distracting noise. In this explainer, we're going to break down exactly how you can tell the difference. Okay, let's dive into this because it's one of the biggest frustrations in trading, right? You think you've nailed the trend, you put your trade on, and bam, you get stopped out again. The thing is, the problem isn't the market. It's that most of us are taught to listen to all the wrong signals.
I mean, you've seen this 100 times, I'm sure. Price is in a nice uptrend, then there's this little pullback, and your gut just screams, it's reversing. But here's the thing, that's not a reversal, that's just noise.
So what if that pullback isn't random at all? What if it's actually deliberate? Understanding this is literally the difference between being a reactive trader, the one who's always getting stopped out, and a systematic trader who sees what the market is really trying to do. All right, so to see that real intent, we've got to look past all that noise and get down to the market's blueprint, and that is its structure. This is going to be the foundation for everything else we talk about today.
And look, here's the great part. Market structure isn't some crazy, complex secret. It's actually surprisingly simple. It's just the sequence of swing highs and lows. That's it. And that sequence tells you everything you need to know about the market's true direction. This really just boils it down to the core rule. In an uptrend, well, buyers are in charge, and you're going to see a clear pattern of higher highs and higher lows. And in a downtrend, it's the opposite. Sellers are running the show, making lower lows and lower highs. So any little pullback that doesn't break that pattern, that's just noise. Simple as that.
Okay, so if those little pullbacks aren't trend changes, what are they for? What's their purpose? Well, a lot of the time, they're very deliberate moves designed to hunt for the market's fuel, and that's liquidity.
This is basically the engine that drives the whole market. See, the big institutions, the smart money, they can't just click buy like you and I can. They need to fill these gigantic orders. And to do that, they have to find huge pools of other people's orders. That big pool? That's liquidity. And price is drawn to it just like a magnet.
I mean, just think about it for a second. Where does almost every retail trader put their stop loss, right? It's just above a recent high or just below a recent low. The institutions, they know this, and they literally engineer price moves to go and trigger those exact spots. And this whole deliberate hunt for liquidity, it actually has a name. It's called inducement. Price gets pushed into these zones to induce traders, to trick them into either getting into a trade or getting stopped out. And that activity is what creates the volume the big guys need to fill their orders. Okay, so this brings us to the million-dollar question, right? How can we confidently tell the difference between a real trend change and just another one of those liquidity grabs that are designed to stop us out? Well, the key is to have a clear protocol. This isn't about feelings or intuition or guesswork. It's about following a specific checklist of events that confirms a real shift in the market is happening. So here's that three-step sequence. First up, you need a liquidity sweep. That's when price takes out a key high or low. Step 2, we look for something called a change of character, or as you'll often hear it, a chotch. Think of this as an early warning sign that momentum might be shifting. But, and this is important, that's not enough on its own. Finally, we need a break of structure, or BOS. This is the big one. It confirms that the new trend is actually taking control. And it's absolutely crucial that all three of these things happen, and happen in that exact order. And this is where so many traders go wrong. They act way too early. They see that minor pullback, they mistake it for a change of character, and they jump in, only to get completely run over when the original trend just keeps on going. This is what leads to getting out of good trades too soon, or worse, getting into really bad ones. All right, to really make this idea stick and help you avoid that common trap, let's use a super simple mental model. Honestly, this is probably the clearest way to visualize what's going on. I mean, think about it. You wouldn't go stand by a river, see a few ripples on the surface, and then yell, "Hey everyone, the entire river has changed direction." Of course not. And you know what? The market is no different. Those ripples, that's the noise. That's the minor pullbacks and the liquidity grabs we've been talking about. They don't mean anything for the overall direction. The powerful current, now that is the market's true structure. The trend only, and I mean only, reverses when the current itself actually changes direction. All right, let's wrap this up and tie it all together with two simple core rules that you can take with you right now. First, and this is so important, you have to remember, those retracements are usually just the market grabbing fuel for its next big move. They are not a sign that the move is over. And rule number 2, do not act until you see the evidence. You have to wait for that 3-step confirmation: the liquidity sweep, the change of character, and then the break of structure. If you don't get that confirmation, you don't take the trade, period. This really is the key takeaway of this whole thing. You have to be patient and wait for the market to show you its hand. Let the structure, not the noise, guide every single one of your decisions. So I really hope this framework helps you start reading the charts with a lot more clarity and, most importantly, helps you stay on the right side of the trend. If it did, hey, feel free to subscribe for more explainers just like this one.
Because that's what this is all about. Clarity, not guesswork. Thanks for joining us. We'll see you in the next one.